Welcome to the Investor Agent Podcast. I'm Steve Seymour, your host, where we help transform the human mindset from scarcity and lack to abundance and wealth, one conversation at a time. Hey guys, welcome to the Investors Agent Podcast. Today we have Dave Van Horn on. Dave is, I gotta say, probably the most exciting guest that I've had on yet for myself. I hope you guys feel the same way after this, if you can pay attention to what he says. So Dave, thank you for being on today.
Yeah, I'll have to look at this guest list if I'm the most popular. I don't know.
Well, at least for me, because, you know, out of anyone I've interviewed, you've personally had the biggest impact on my real estate investing career. So I just want to thank you for that as well. Yeah, so I don't want to go too much into all your backstory, but I want to give people a little bit of backstory about how you got into real estate. We keep that short and sweet, and I want the meat and potatoes of this to be, you know, really what you think is going to benefit the listeners the most in terms of their mindset, as the intention of this podcast is to transform the human mindset from scarcity and lack to abundance and wealth. Nice. So, well, before we dive into that, how did you get into real estate? I know you've shared your story many times, but we'll.
I had gone to college and I got out of college and couldn't get a job, and I was working in construction, and I worked in construction through college, and then, you know, I couldn't even afford an apartment at the time, and I was living with my mom, and I had a wife and son, and I was, you know, coming home from construction all beat up, and my mom said to me one day, "Why don't you try real estate?" And I went and got my license, and that's kind of how it started.
That's how it started.
Yes. And
you've done many, many different avenues in real estate. Do you mind just touching on
all of them? Oh,
just hit on, you know, the major,
bigger ones?
The major components of which aspects you've delved into.
Yeah, well, in the beginning, I was a regular agent for the first probably 15 years. I was an agent for 35 years. I do have to disclose I'm not an agent today, but I was an agent for a long period of time.
That must feel nice, right? To disclose that you're not an agent.
Yeah, well, it's not that I'm disclosing it. It's just, but no, I was an agent a long time, so I'm more of a retired from being a realtor at this point. But I guess in the beginning, you know, I was just normal sales, and but I was still working, a full-time job as an agent. And there were times when I was the top agent of the office, which they were kind of, they kind of couldn't see how that could be. Like, how could you be the top agent and you're part-time? It was kind of but it was a time management thing, I think. And then, I got into investing, and that started when I was taking a course towards my brokers, which was a real estate investment course. And the teacher at the time was, you know, how many people in here have credit cards? And we all raised our hand. And he's like, how many of you are buying houses? And all the hands went down. And I remember going home and telling my wife I was going to start buying houses with credit cards. That went over pretty good. Yeah. And that's what I did. I was handy because I was a contractor. I had access to deals because I had the MLS and stuff. And then I had, but I didn't have capital, right? And that was the missing piece. And basically, the credit cards acted as a form of capital. Now, I wouldn't do that today. I wouldn't recommend that. But back then, credit card checks and cash advances weren't fee heavy like they are today. It was very loose capital. And then what happened was I'd, write myself a credit card check, go pay cash for a house, renovate the house with a credit card, move a tenant in, refinance the property, pay the credit cards off. Actually walk away with cash that was tax-free because I'd refied for more than I had in it. And then I would still cash flow a few hundred a month. And back then, this was years ago, that was pretty good. And then I'd go do it again and do it again and do it again. And then the next thing you know, they were raising my limits, and I had like $500,000 of credit cards. And then, fast forward a few years, property values jumped up. And next thing you know, I had a few $1 million in equity. And then I started tapping into equity. At one point, I had like 11 lines of credit. And I became a lender, like a hard money lender for fix and flip loans to fellow contractors. And I used the equity lines and used my retirement accounts to do that. So that's how I got into the note business and into lending. And,
so that's a lot for some listeners to digest, right? But let's just say, would you say that the biggest shift for you was that you now had a different way of thinking about accessing capital, and then you continually improved upon that?
Yeah, I mean, when I look back on, people will ask you, what would you do different, or what would you do if you were young again, all that kind of stuff. And it really comes back to leverage. So it's, even one of my coaches, I spend a lot of money in coaching over the years. And the one good question is, what's the one thing that you're going to leverage in the next 6 to 12 months? Notice I didn't say 10 things. I said one thing. What's the one thing you're going to leverage that's going to catapult you, in your business life? And you can apply that to anything. You can say your personal life. It could be the little league team you coach. It could be the church. It could be whatever it is for you. It doesn't have to be just business all the time. But if it is a good question, you should ask yourself that every quarter or every 6 months, because it changes, right? The answers change. It's like there's an old story that Einstein gave the same test year after year, and one of the faculty members came in and said, you're giving the same test again this year. And he's like, yeah, but the answers have changed.
Right, because we change on our circumstances.
Well, physics was changing, right?
So that's the one thing that's certain is change.
Yeah, change.
So continually asking yourself that question, what is the number one thing that will catapult yourself or your business over the next 6 months, or 3 months, or, just continually asking that question?
It's the leverage question. So sometimes it's people, sometimes it's capital, sometimes it's technology, sometimes it's education. Sometimes it's a JV partner. It could be all these different things.
So even though you have a coach telling you to do this now, you must have been asking yourself that question in some form over time as you evolved with credit cards, lines of credit on rental properties, hard money lending.
I don't know that I was that smart at the time.
Well, there was some evolution of thought process in terms of growth.
Yeah, I mean, in the beginning, though, where I had a messed up mindset in the very beginning, because I was more of a just work harder. I worked 2 jobs for 22 years, really 2 full-time jobs, right? And so, and then I had properties too, and then it was just you sacrifice something for that. So I wasn't utilizing leverage enough.
What do you think was that?
I'll give you a perfect example of that. So at one point I was a RE/MAX agent. I was selling 75, 80 houses a year, and I was selling mostly to investors, right? And looking back, I was like, I could have bought all them. I had all the resources. I had all the connections. I had the hard money. I had the regular bank financing to take out the hard money. I had all the repair guys, the clean out people. I had all the network. I had all the
pieces of the puzzle.
I'm providing all the pieces of the puzzle. I'm providing the property management. I was a property manager at RE/MAX at that time. So I was so focused on commissions that I was missing the bigger picture. I could have been buying 75, 80 houses a year instead of selling them to my clients and providing them all the services. I had all the services right in front of me, right? And I was getting multiple streams of income. I owned a title company. I had an insurance license as well. I used to run mortgages through my wife. I had a painting company. We would do, and then I was a property manager too. So each client might buy 5 houses from me, and I would continue to get business from the, recurring revenue of rental property. And you could kind of see that in this market as agents slow down. You see the value of that, having these steady streams of income in other verticals, whether it's cash flow from tenants or whatever.
So it's not that you had bad choices or made, bad decisions. It's just with foresight, now looking back, you could have done things differently. And
I could have done things way better and much quicker than I did.
That's called wisdom, right? Because we have information, which is, all the different information out there, and then knowledge, which is like the application of that information in a sense, understanding it. And then we have wisdom, which is knowing all the different pathways to utilize that knowledge and then choosing the best pathway, right? So, I think with your wisdom and experience and all the different things that you've done, what do you feel like is the best way for people to gain wisdom versus just chasing information and reactionary, a reactionary approach? Like, because you said you had a poor mindset. Just work harder, let's just add this.
In the beginning, yeah.
Right.
Yeah.
So then how do people gain wisdom in this business to, accelerate their chances of having, a better pathway?
I mean, it's a combination of things, but it is a learn by doing business, right? For sure. So if people are reluctant to take action, you'll never learn anything really, except out of a textbook or something. I read a lot, and then I have a lot of mentors and coaches and things like that over the years. But, looking back, I would have done things differently than even what I just described, because I was kind of describing like a multiple streams of income type setup. And as I got older, I changed that view to more of doing what I'm best at and focus. So it doesn't mean I wouldn't own a piece of a bunch of companies, but I don't know that I'd be as active as I was. You know what I mean? So, and I would be focusing more on what I was best at and then bringing in folks to do the other pieces. So I would probably do it a little bit differently there too. But I think it's just a combination of things. It's not, I don't know that it's any one thing. You can definitely learn from other people's mistakes, but then you also have to do some trial and error yourself, some R&D, I'll call it.
Yeah, and I think it takes a level of being humble to, seek out a coach and have someone be willing, being coachable. Anyone can seek out a coach.
Yeah.
But to go to someone that has been there, done that, has more experience or could help you, essentially accelerate faster than you could on your own, it takes something to let go of that and be humble and be growth-minded. And that's something that I see in you where, not to call you an old dog, but, a lot of people that have reached your level, they're kind of like, I kind of know it all, been there, done that. And I just want to acknowledge you because I've seen Dave come to a local real estate meetup maybe a year or so ago, and one of the speakers was there, and Dave's taking notes. He's the most experienced person out of a room of 40 people. No one's taking notes. And Dave's sitting there just taking notes the entire time.
I always
just
take
consuming information and discerning that information, right? Because we're bombarded by so much now.
Yeah,
so I guess,
noise.
How do you have that internal compass and that GPS to discern the information as to what's going to really be best for you? I put a lot of weight in anything that Dave tells me to do because I'm like, this guy has so much experience, so much knowledge that I don't have. So I'd be foolish to not take what he says seriously. But
I'm not always right.
Well, I think you have a gift in that, whether you acknowledge it or not, the ability to discern what's the best pathway.
No, I've been lucky, and I've made mistakes too. I mean, I've lost plenty of money in different transactions as well, right? I mean, there's times I've lost $250,000 or $500,000 on something, which not many people want to brag about a loss like that, right? But it's kind of like, are you going to make, millions and millions of dollars if you've never lost anything? And that just kind of means you've never tried. It's funny. I was with my grandson just turned 17, and we were riding down the road, and he got in my car, and I was like, "So what did you fail at this week?" And he's like, he's looking at me, and I'm like, because I basically like high-fiving him if he failed at something. Which is kind of a reverse mindset, right? It's like everybody else is, oh, you didn't fail, you failed a test or something. I'd be like, oh, you failed a test? Oh, great. That's awesome.
What'd you learn?
Yeah, what'd you learn from that? And then he goes, I didn't fail at anything this week. I'm like, well, then you didn't do anything or you didn't learn anything. Yeah. I said,
so you just wasted another week.
You wasted another week. What are you doing? Get out there and take some more action.
Going back to the scarcity mindset, right? Like talking about transforming that, because I see this as prevalent. We've interviewed a lot of people in terms of what stops them. And ultimately, if you boil it down, it's fear. It's usually some sort of fear. Like if they have a desire to create wealth in real estate and they see that as a pathway, the number one thing that gets in the way is fear. And then the way I believe that this manifests is through scarcity, a scarcity mindset. And it's typically not enough time, not enough money, not enough deals, not enough information, whatever it is. And then they get stuck in that. And I've seen that, people like yourself who have been abundantly successful, they also have an abundant mindset where, you've never once been like afraid to share your secrets with me in terms of like your secret strategies. You're like, no, this is how you do it. Right. So did you struggle with ever shifting that and, coming into, because I knew you grew up not, you had a single mom.
Oh with like single mom with 6 kids. We were
didn't really grow up with
government assistance.
Anything. I mean, you are truly like self-made, right?
True.
A lot of people are not. They're handed that, portfolio.
I wish I was handed something, but
I don't know. I don't think you do.
No, I don't. I don't.
There's a lot of, I think there's a lot of, I don't want to say pride because that has such a negative connotation, but of value in creating it yourself?
Yeah, I mean, well, back to what you were saying at the beginning of this was, there's a Tony Robbins quote where we don't lack resources, we lack resourcefulness. And I mean, there was a time when I didn't necessarily know that or buy into that. But as I've gone along, I've realized that is, everything's right there in front of us. It's back to that example I gave. Here I am acting as an agent, selling 75, 80 houses a year to other people, trying to make a couple grand commission on each property. And those people were making millions. And I'm like, it's just like the builder, right? When I was a contractor for a builder, I was a subcontractor. It takes 25, 30 subs to build a house, and you work for the builder. Well, the builder is making all the money, right? He's leveraging all the subs, right? Or the GC, you get the idea. Yeah. And it's just like, we just have this, I don't know. We just think, oh, well, I'll get more jobs. That was the contractor mindset.
So was the shift in mindset that you now need to focus on being resourceful versus what are the resources in front of you?
Yeah, and it's kind of like all the stuff's right there in front of us. Are we using the gifts we have, right? Are we really thinking it through? And sometimes we're the cog in the wheel of things, so to speak. And it's, the note business was that way, right? I always say everybody's in the note and mortgage. I'm mostly in the note and mortgage business, but I say everybody's in the note business. Everybody's in the finance business. And if you look around, even the room we're in right now, Steve, everything in this room has been financed. From the land on up, almost. Yeah. Everything. The building, the furniture.
This was an SBA loan.
Exactly. Everything's
93% finance with both 90% with 3% rolled in.
But most of us aren't paying attention to the financing, for example. It's just happening all around us, right? We're in the note world. We just don't pay attention to it. We're just making payments on a credit card, a student loan, an auto loan, a mortgage. We're not thinking about all the financing crap that's going on behind the scenes around all that, right? It's just you're not participating in it, but it's still happening. Does that make sense? So I just think that.
So you then shifted your focus to that.
Well, some of that was leverage and scale. Like I could, once I got up to like 40 places of properties, I was on my way to have, 100 units. And, I have friends that have 500 units. I have one buddy that had 1,500 units. And and we do too. Like my company has 1,000 units of, apartments and things. But it's just like, but then there's all this other stuff with it. But with mortgages, much more scalable. Like we have, we've bought over 13,000 mortgages, right? Well, if I had 13,000 rental properties, you can see the workload there. Yeah. But then again, I only have 30 employees, right? So it's like, how do you, what are you trying to scale? And what is your model? What are you trying to do? We're trying to scale capital and technology and not necessarily personnel, whereas some companies are trying to scale personnel or, it's different things. Some people are leveraging, the people. Some people are leveraging the technology. Some people are leveraging the capital or a combination thereof, right?
It's really smart. So, I heard a lot there, and I don't know if you're open to sharing some of the transitions now that it's a big announcement out there. With I'm sure anyone that's watched PPR over the years has been like blown away by their ability to scale, and the growth is tremendous. Just from the outside watching over the years, I'm like, wait, PPR is doing this? They just bought $211 million worth of assets last year or whatever it was. I know it's more than that, but
it is more than that.
I'm just in a single purchase though, of a pool. So you recently hired a CEO.
Yes.
And moved to chairman of the board, right?
Yes, I'm executive chairman. And, it was a succession plan that was, a couple years in the making. I actually had a coach from about 2 years ago he's a gentleman that was from the Atlanta area that flipped probably, something like 400 businesses or something crazy. And, he flips businesses like we would flip a house, right? So he was kind of my advisor on some of the succession planning initially. And I have other coaches as well. And then it was forming a board as well. It wasn't, it was hiring a search firm. That was a big, it took us several months, probably almost a 2-year process to hire the search firm, to find a CEO, then interviewing potential candidates, and then finally getting a CEO and negotiating everything and all that good stuff, and then forming a board as well. But it's been very advantageous to have board members that are, like one of our board members, for example, has already taken a company and sold it for several $100 million, and was very high profile, professional, publicly traded companies, that kind of thing. And they come in with, years and years of experience, and they're very helpful to the gaps you have in your business. So I strongly recommend people to have some form of advice, outside advice, because we can't all see everything ourselves,
And that just goes back to you being such a resourceful person and knowing enough to know that you don't know everything.
Right.
And you mentioned about, getting out of your own way and being a cog in the wheel, right? So
yeah,
that's why I continually always think of you as like one of the most humble for the level of success you have. Just, it's like, well, someone else can do it better. Why should I get in the own way versus ego? Oh, I built this, or, I've never heard Dave be like, I built this company. It's like, I know you CEO you drove you steered the ship, for many years.
Point. I mean,
I'm sure there was other influences. You have partners, but ultimately you're the visionary. You're the one creating this. And now it's like letting go of that, I think, is extremely humbling. And like, it's inspirational to me to see your humbleness and letting go of the vine, so to speak. And I know obviously you did a lot of, it was a long process in terms of finding the right person and having that trust and faith in someone who will actually do a better job than you, right? And stepping away because it's your baby. You created this thing. It's huge.
Well, I watched the show Succession, and I was like, no, I don't want this to happen. No, I think it's, part of that was from my insurance sales experience, because we did some financial planning and things like that. And I don't think people plan to fail, they fail to plan. And they do that with businesses as well. And, I do have good partners. I love my staff. My one son's worked there 12 years, so it's like, you want to see continuity of the legacy a little bit, and you want to be proactive and do it right. And, today I'm executive chairman, which means I still play a role, but it's more of what I'm good at than doing, as CEO, you're wearing a lot of hats, especially in a small business, you're wearing a lot of hats. So it's just like, how do you, what's your next? How do you get some of your time back and things like that? And then also, how does this help the company? The gentleman I brought in came from a company that was scaled massively over the last 30 years, which was SEI, right, which is publicly traded, 1.3 trillion under management. We're a much smaller firm. We're just approaching $1 billion in the next year. And, we're probably around 300 million in private equity. But we plan to really grow, right? We're really like a 15-year-old startup. And, we changed our model recently. We went through COVID like a lot of other businesses, but we're still here, right? And now we're getting ready to really take off and scale this. So bringing in someone that's already scaled a business massively, and then also bringing in board members that have actually taken a company, whether it's to sell or go public, it's a big deal. It's not my ballywick, right? Like it's, hey, bring in the people. There's plenty of things I'm terrible at, right? Operations could be one of them, right? I'm not your ops person. Total respect for, ops people or other things too. It could be CTO, it could be, in-house counsel, whatever it is. You can't be an expert in everything, and to think we are is kind of foolish. And sometimes we become the weakest link too, where, I remember in the beginning, like I was, halfway decent at marketing because I had been a realtor and insurance person. And then, but later on, as my business grew, I became one of the weaker links. I'm like, I'm not a director of marketing for $1 billion company. You know what I mean? Like, I need to bring in different people, right? I mean, I was okay as the realtor marketing, bozo that's doing some stuff, but it wasn't, the levels change as you grow, right? It's just like you might start out with a bookkeeper in your business, and then next thing you know, you have a controller, next thing you know, you have a CFO, right? So you're constantly upgrading your accounting or whatever it is,
Well, I'm fascinated as how, like, if you look at the cash flow quadrants that Robert Kiyosaki talks about in wealth creation, which is really why we're having this conversation, is to help give people back opportunity that they might not have had by sharing information, knowledge, experience, and wisdom. But in that cash flow quadrant, really, you have your employee, self-employed, business owner, and investor. And you can kind of see the progression in what Dave's story has been as, really being self-employed, being an employee.
Yeah, I've been in all four quadrants.
Been in all four quadrants
at the same time.
And how he's kind of like mastered being not only just a business owner, but also an investor. The two quadrants where there's opportunity to really change the life of your life, but also generations following you and impact other people in greater ways than you ever would be able to. So I know before you've mentioned like impactfully investing, and I want you to touch a little bit on that and what that means to you and some of the charities that you've been able to give back to, because a lot of this, we get stuck on like that fear. And one of the hurdles to get over that is by leveraging other people, specifically our care and inspiration for other people to make a difference. And I know that that's been a big driver for you. Like, it's not just, oh, I grew up with not much, but you've had enough foresight to see that so many people are struggling with these things, homelessness and all the different things that humanity struggles with, and how having resources can really change lives, and how that has fueled your drive to make this bigger and better, So share a little bit about impactful investing, what that means to you, and then how you've adopted that into some of the strategies, as well as like also giving back.
I mean, I think it's a combination of things. I mean, one of our things was, well, first of all, one of our company's core values is care it counts, right? So we do, the employees pick charities like a lot of firms do, and they do all these various things. And a lot of ours are housing related too, whether, the habitat type stuff or the homeless, Project Home type stuff, where it's helping the homeless and things. As a company lately, we've done a lot of stuff in the stabilization of neighborhoods and stuff, because we buy a lot of delinquent assets, or the big thing we're doing now is a lot of affordable housing, because there's such a gap in the U.S. with affordable housing. There's a big, income inequality. You'll hear about it in the media. But it's getting to a point where the gaps are getting just wider and wider, and people just can't afford housing, right? And then it creates more homelessness. All you have to do is go to some places like Southern California, and it's just out of control. So, it's like, it's easy to just go make money and go make more money. And okay, what does it all mean? Or can you, it's easy to make wealthy people wealthier, right? That's not okay, let's pat ourselves on the back.
It's been happening forever, right?
Yeah. So, what else can you do that is more impactful than that? After a while, it's just, is it another zero on an Excel sheet, or can I go do something more impactful? Is it another Rolex watch, or can I go give that to the homeless or something? So it's just, not saying what, I know a lot of people have their own charities and things, which is good, but I just think as real estate investors, especially, how can we be more impactful in what we do and have a positive impact? Because a lot of times we have a negative reputation, whether it's as realtors or whether it's as real estate investors or landlords or whatever that is. A lot of times there's a negative connotation to some of that, and how can we bring out the positive in some of the good work we can do, just put a little more thought into it. And that's what I'm kind of getting on about, how can we be more impactful in what we invest and still do well, still make money and still,
it can be a win-win.
It can be a win-win. Yeah.
And would you say it almost accelerates the win-win when you have a bigger why of what you're doing?
Yeah, absolutely. Because there's tough days when you don't feel like doing something, you'll jump out of bed because it's not about you. It's a purpose bigger than you, right? So whenever it's a purpose bigger than you, it takes on a whole nother meaning, whatever that is, I've entertained all kinds of stuff lately, we had done a lot in drug and alcohol recovery as well. And we, my wife's trying to do something with unwed moms, like we look at other areas of, society that we could be more of an impact,
So in your experience in life, does it ring true that you get what you give?
Well, definitely giving is more rewarding than making. You know what I mean? It's there's no comparison to me. So I get definitely more reward out of, doing the impactful stuff. So sometimes it's a little selfish that way, I guess.
Well,
but it's more meaningful,
Yeah. Well, I guess everything could be selfish. And if you say that, if you jumped in front of a train to save someone's life because you wanted to help them and that's what you wanted, then that was selfish, right? But no, sure. I think there's something that speaks from the heart about what you're saying that is a fundamental thing in humanity, I had a relationship coach who was in the World Trade Center when the towers got hit.
Oh, wow.
And he said everyone was running down the stairwells because the elevators were locked, and he ran up. And he said it was instinctual because he ran a center and he had people in there and he wanted to make sure there was no one in there. But he said that that's when he knew he was a true humanitarian, because it was instinctual to help first. Before human thought comes in, was to help. And I think that's where that scarcity mindset comes in, is when you don't have enough, you focus on yourself. And when you create the abundance mindset, you focus on others, and then that fuels more abundance. And that's really what I was trying to highlight in that, where I've seen time and time again and looked at very successful entrepreneurs and business owners, and a lot of their focus is other people. It could be their employees, it could be their customer, it could be, but it's typically others focused. And I've seen that a lot for Dave. So, if Dave's impacted your life, put a little comment below, or if this gets posted out there, or shoot Dave a text or an email and just be like, hey, you had a big impact. Because I think you never really know the ripple effect, the pebble in the pond of how far it goes out, and then it comes back, and that ripple kind of continues for a pretty long time in smaller and smaller waves, right, with different people. But it could be immensely bigger waves because you've helped me, I'm helping other people, right? And you've done that. There's so many real estate investors that attribute their success to just Dave sharing information. And I don't personally know anyone locally that has given so much back to the real estate investor community that you have, just openly sharing. And I think that that's a huge reason why you've been so successful, because everyone, is just grateful for that information. So I wanted to highlight that and thank you on the show here. Just a couple other things, like if you had to give someone maybe 3 tips in figuring out their investing career, because a lot of it is, information overload, analysis paralysis. Like, what are some tried and true proven strategies that you really believe in, that if most people put their effort into these areas, they will be successful in terms of investing? And it could be real estate, or it could just be in general, in terms of creating wealth and, having it be long lasting, not just the get rich quick scenarios.
I guess in the beginning it would be, a lot, like you mentioned, fear, right? So how do you overcome some of the fear? And I think one of the best ways is to, we talked about having coaches and things like that, but that can't always be the case. But sometimes you could just shadow a deal or shadow someone that's doing deals without necessarily having to put a lot at risk, right? And you could also co-invest and things like that. So no one says you have to go in and lose a bunch of money, because I think that's what the fear is. I'm going to waste a bunch of time or a bunch of money. And that doesn't really have to be the case. There's ways to get started without risking a lot, is what I'm getting at. So that's one. And it just gives you more confidence. And then another one would be, like, sometimes people don't know if they have a real deal or not, for example. Well, you can always take your deal to someone more experienced, like a hard money lender. If the lenders won't lend you on your deal, then you probably don't have a deal, right? So there's some common sense things here, I think, that people can utilize that they may not be aware of. And then really, what are you good at, and focus on what you're good at, and don't necessarily, spend too much time trying to get good at everything. I think for me, that was definitely a big mistake. And then managing, people mismanage a lot of their time as well. I know one thing for me, in recent years was I would take my Outlook or Google Calendar, whatever people were using, and I would look at that, and then I would build 3 lists, and I would put stuff I really love to do, stuff I really hate to do. And it's really stuff that gave me energy versus stuff that gives me negative, no energy. It's draining, those types of meetings and things like that. And then I had the middle column, which is actually the trickiest column, because you can go through your daily schedule and you're like, do I really need to be in this meeting? Do I really need to be doing this? What is, do I get energy from doing this? That kind of thing. Is this my best skill set? Why am I doing stuff that I'm not best at? That's easy to delineate that. And you get back some of your time, but it's that middle ground where you're doing stuff that you don't notice it. It's not painful for you, but it's not necessarily giving you a lot of energy either. But there's a lot of things we do that should we be doing them? It's that kind of thing. I'll give you an example. I'm a very good painter, but is that the best use of my time, right? And the answer is no.
It doesn't give you energy to.
No, but I mean, think about it.
Maybe on a weekend if you're bored painting at your house.
No, but I was a painting contractor for 22 years. So do I know how to paint? Absolutely. I could draw a straight line and like no problem. But should I be doing that? That's so
really figuring out what you're best at.
Really
your highest
figuring out
and best use of your time.
Best use, and
that's like real estate. Highest and best use for real estate. Well, highest and best use for you.
Maybe it's being a property manager. Maybe it's being a listing agent. Maybe it's being whatever you're best at, just zoning in on that. And then, figuring out the rest of people that are really good at that. And there's a lot of things we do because, no one else is going to do it quite as good as us or something like that. But once you get people there's always somebody out there that they get their energy from doing some of the things you don't like. And that took me a while to go, oh, that really does exist.
Yeah.
Or they're doing it 80 or 90% as well as I would have done it. Why not hand that off? And, it took me a while. Like my main thing was raising capital, right? And now I have a whole investor relations team. They raise all the capital. I have people that, I don't really answer phones or messages. Like there's people that do all that stuff. I don't answer email or anything,
Because you're probably not great at email, or maybe you are great at it, but it doesn't give you energy. It doesn't fuel you.
Well, it's just not a high value, right. It's just not a high value activity. I'm not saying I never answer personal email or something, but I don't really take like business email. I don't take business calls really.
Well, I appreciate you sharing all that. I know I said that was my last question, but I have one more question because I feel like this is a burning question that kind of everyone has. And I know it's like a vague, open-ended question, but where the market is, and then more importantly, where are we heading? In terms of obviously on the macro scale, you're nationwide with your investments, and there's capital markets that are changing things, but there's also like a major inventory issue. Everything's been focused on the interest rates, but coupled with the low inventory, obviously that's more market specific. The rates are what they are. Where do you see things, where do you guys see the opportunity? Because we all want to know where the hockey puck is going, not where it is now. And, that's something that I know Dave is going to give me a answer that I'm just going to have to think about and not very clear, but I'd love to know your thoughts on it.
Oh, wow. So obviously, everybody's been following the rate hikes, and we're fortunate. We have an economist on staff, so we get a lot of market updates. And you saw the recent, rate hike. Will you see one more? That's the big question. You may see another quarter point or not at the next meeting. It's possible, but everybody tends to think it's going to level off from there. Wall Street's kind of built that in already. You're already seeing some of the housing price shifts. You're seeing stuff in the media right now where the West Coast and East Coast, the West Coast is falling in their values all the way from California to Austin, but from Colorado east is actually still maintaining their values, and some are going up. So East Coast is faring better than the West Coast. But then again, they didn't have dramatic increases previously, right? So some of that's going on, but it's back to what you said. It's
Doesn't that sound like history kind of repeats itself a little bit?
A little bit, but I mean, it is very geographic is what that's showing you. And we sell probably in the neighborhood of several hundred houses a year throughout the country. We're in multiple states, but our top 5 states are California, Texas, Florida, New York, and Pennsylvania. Just so happens to be where a lot of population is, right? Yeah. Where a lot of growth was. And so, yeah, you'll see some shifts in the market. Like it's probably a good time if you're trying to buy in, say, Austin. You're not going to see a pause like this probably in the future, right? So if you're looking for a house, hurry up and go buy it, right? So, but then again, if you're looking to sell, you might want to wait a little bit because I think, rates will start to calm down. They're really trying to, get at this inflation and, wages. Once
Think
inflation,
they're going to be successful with that?
It's a tough one. The reason they're having such trouble is because it got into wages, and once inflation gets into wages, it's really hard to get your arms around that. And they were slow to the game, right, to putting a curb on that. And then they tried to do it all at once, and you kind of saw what happened. It did some banking stuff and things like that. But actually, that banking stuff is actually helping the situation, believe it or not. But we buy a lot of distressed assets. The biggest economic indicator for us is unemployment, and you can see unemployment hasn't really ticked up. Unemployment's still pretty low, and that's why you're not going to see a ton of default on the residential side. You won't see another 2008. Also, we have a lot more. There wasn't a lot of junior liens in the market right now. There's a lot of equity in people's properties right now, so it's much different than 2008, where there was high unemployment, right? No equity in people's houses because property values had fallen. You know, it was a different time. So I think it's much different than that. And right now, I think the opportunity is more on the commercial side, right?
That's what I was going to say, the CMBS.
So you're going to see it in the office space, obviously. You're going to see some retail, and you're going to see some multifamily shakeup probably, because a lot of people had bridge loans. I'd say probably half the multifamily loans were bridge loans that are going to adjust, right? So I think there's going to be a little bit of fallout there. So some of the opportunities are going to be in larger multi and in, you know, like office space. You can see the malls too. A lot of malls are trading at like 40 cents on the dollar.
Yeah, there's some negative news out there about the, you know, commercial backed mortgages, right?
Yeah.
So are you guys seeing
that's positive news to us.
Right, but you know, you can't always believe the news you read on Google and NBC or whatever, CNBC and all that. You know, it's just what are you seeing in reality, like in the current environment now with that? Are you seeing more distress?
Some of it hasn't happened yet. Like we are seeing somewhat of an uptick on the resi side in distressed debt, but it's not a dramatic because unemployment's still low and there's a shortage of housing, right? You know, we're still short that 4 or 5 million units, which is dramatic, right? So that's not going to change overnight. And we're not building enough inventory either, right? Especially on the resi side. Now, apartments, Class A, there's a ton of space, right? So it depends on what piece of the...
There's a ton of vacancy, you're saying, on the
Class A? Yeah, you're going to see
that
tick up. There's a lot of units coming online this year, especially in Class A space.
So it's kind of just like where the pendulum swings.
More than demand.
You know, they overdeveloped a little bit for that. And... but not on the single family side.
There's gaps in the lower cost apartments, for example, like in the C and B space. There's not enough inventory.
Not enough affordable
Class
housing.
A space. That's the only thing they'll build, right? So it makes sense.
Okay.
And then, but yes, the residential side. Well, it's going to be tough now with sales because the rates are higher, right? So you're going to see a slowdown in the realtor side potentially. You're going to see a slowdown in buyers because of the higher rates. I mean, you're not going to be able to buy as much house, or you won't have as many. Now, that doesn't mean you won't have anybody that needs to sell a house because, you know, I was telling my son that, I was like, you know, when I started as an agent in 1987, rates were 14. And by, I'm trying to think, 2006, I bought a rental property and my partner, John, was my lender. And it was an 8% investor loan on my rental property in Delaware County, right? So, so that shows you rates went from 14 to 8 from 1987 to 2006. What does that tell you? It was a very high rate environment. We still bought and sold houses. That's my point. There's still activity going on. So it's just you had to do business differently. That's really what it was, right? So, you know, we still had businesses and jobs and sold houses. It wasn't like, you know, you didn't do anything, but you shifted the way you did business, if that makes sense, you know.
So what I'm hearing in all this is, you know, if you break down business basics, you know, 101, supply and demand, single family houses are still going to be in demand.
Yeah, they will.
Probably not too much distress there. And if you see if the cost of capital goes down, if the rates drop, would you see those climbing again then?
Well, I think you'll see that market start to come back somewhat. So the question will be, you know, how much unemployment do we have between now and then? That's really what will drive that. But it is expensive to build something new, right? So it starts to, you know, I think you're going to see less. Well, think about it. With high rates, nobody's refinancing, right? And you know, I have a 2.75% loan on my house in Chester County, right? Like, where would I go? I'm going to go sell that house, and I'm going to go get it a 6 or a 7 or whatever it is.
9 out of 10 people we talk to that want to sell, the reason they don't is because they don't know where they're going to go.
So you're going to stay put, and you're going to, you know, figure out something else in a lot of cases, right? You'll just be patient. I'm better off waiting a year or something, or a year or two to things calm down and then go, oh, okay, now's a good time. Yeah. Unless you're a cash buyer. If you're a cash buyer, you're actually going to see opportunity if you're savvy, you know.
And with Class A multifamily being, let's say, slightly overdeveloped in certain markets.
That's a general statement,
right? But in certain markets, certain markets probably is not. Would you see a potential rent drop in those markets, and then does that ripple into B class? As you know, if you know, let's say a market is demanding a certain rent because of.
We're not really seeing the drops. So we're monitoring a lot of markets, right? Because we do, you know, we're looking in a lot of the Sun Belt and all the other places especially where there's growth. And what we're noticing is that you're just not seeing as much increase.
Yeah. just to slow down.
Yeah, you're just seeing, the increase are more modest, but they're already kind of high, right? So it's Now the other opportunity for us is
no one's complaining that rent's too low. I haven't heard anyone complain about that.
No, I know. And
except for the landlord,
it's going to start to become an affordability thing.
Yeah.
It's one of the reasons we like the affordable housing space, because a lot of, we get a lot of tax advantages, LIHTC credits, they waive, tax abatement, that kind of stuff. And then the other thing is a lot of the cities, because there's such shortages, they're letting us, for example, we're doing some stuff in Austin. They're literally letting us build twice as many units as normal.
So density.
They're giving us way more leeway in that density component than
because it's a demand, right?
Because there's so much demand so I think we just have to rethink some of the things we do. Most people are like, well, I don't want to go into that. It's a lot of paperwork or it's a lot of this, but there's advantages to doing, differentiating yourself in some of those areas of trying to do just a traditional thing. I think the play will be more in the multifamily restructuring of a lot of, anybody that went into a value add in the last 3 to 5 years, they had this, the cap rates now are much higher. That means they can't get as much of a sale price when they go to sell.
And if they were anticipating the same level of rent growth that was, 2021, 2022, they might not see that going forward.
Well, a lot of them are in those bridge loans and now they're adjusting, right? And then it just eats up all their cash flow. So basically they're managing a place that's not making any money or losing any money. So they have no cash flow. If they go to refinance, the terms are terrible. So they're in a box, they're in a tough spot. So you're going to see some opportunity, I think, in some of those areas maybe.
Cool.
Yeah.
Well, Dave, thank you so much. I appreciate your time now that you're semi-retired.
Yeah, that's a big word, retirement.
All right, we won't say that.
Yeah, I haven't really slowed down. I just do other things. That's really.
But you have to share your most recent goal that you set.
Well, one of my goals lately is it's kind of like that, not have any goals.
There you go.
One of my goals.
That's the ultimate goal of all goals.
The ultimate goal, because if you don't have to worry about having any of them, you can get on the goal treadmill too, And I'm just being kind of smart alecky with that, but I am trying to change some of the stuff that I did though.
We're talking about wisdom. There's wisdom to not have any goals, like in a sense.
It's more about freedom. I have a buddy that's big on do what you want, whenever you want, wherever you want, with whoever you want, that kind of thing. And there's something to be said for that. And rather than just going bonkers, more. If you sell your company,
I know who you
hundreds
are.
Of millions of dollars.
You not having any goals is not going to stop you from
they're just going to be different.
Things, right?
Yeah, they're just going to be different.
So, well, we appreciate your time, Dave. Tell people about your book, how to reach your website, anything that might help them. If this information was available, at a higher level, more detail, how would they access more of Dave's thought process and brain?
Yeah, there you go. We're definitely bigger on passive real estate investing as opposed to active. So if you're interested in more passive investments, then we're your cup of tea. I do have a book out called Real Estate Note Investing that's on Amazon or wherever, Bigger Pockets. And we actually have forums on Bigger Pockets. If people want to ask questions, we answer questions pretty much daily. We have a LinkedIn group, distressed mortgages group on LinkedIn and things like that. So people reach out to us through that. And then we have a website at PPR Capital Management, which is mgmt.com. You can find out more information about our funds and what we do.
Yeah, and some of your funds are paying some pretty nice returns in terms of, passive investing with real estate backings.
Yes, real estate backed investing. We have like a 1-year option. Well, it is only open to high net worth investors, but our 1-year option is 10% preferred return, and then we have a 3-year option that's 12%. And you can get payments ACH monthly, or you can elect to compound your returns, and it actually juices the yield to about 14.4%. And then we have options for qualified plans. If people want to invest through a qualified plan with us, they can.
So that's at 14.4% or whatever. What's that going to double every how many years? Let's use that rule 72.
Well, you start to question, do I really want to have active stuff? Because if you can do
what's it, about 5 years? It'll double.
Yeah, especially in a qualified plan. There's no tax on that. That's equivalent to making 18, 19% or something.
It's not too shabby.
It's pretty high yield, right? So, and you're not really doing anything. So if you want to get out of the Home Depot line, or you don't like taking calls from your property manager anymore like I did, then you'll maybe take a look at us.
What you used to say, tenants, toilets, and townships?
Taxes, tenants, toilets, townships, and of course contractors. We can't leave them out.
Yeah.
So they're the worst.
Well, Dave, you were a contractor, so
I can say that.
Don't be so hard on them.
No, I can say that because I was one.
I'm a realtor. I can't stand realtors.
Yeah. I hear you.
Let's cut that out.
No, he doesn't mean that.
Yeah. Well, thanks again. Appreciate it. We'll put all Dave's info below, and hope you guys found some value in this conversation.
My pleasure. Thanks, Steve.
Thank you for tuning in to the Investor Agent Podcast today. We hope you found it valuable. Please tune in weekly at theinvestoragents.com.